Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Tuesday, October 2nd, 2018. A couple interesting things to report today so far. Nothing major, but one thing I wanted to point out is an update here on NQ and ES. So earlier today, interesting, this morning we had a breakdown. Lately I've been highlighting or focusing on this minor uptrend line right here. This is a larger uptrend line. It goes to the left of this chart, which, by the way, this is a 60-minute chart, meaning every candlestick represents 1 hour of trading, and it goes back 2 months. So this trend line goes back a couple months before that, I believe. And this is the minor trend line. So again, this is the one I've talked about here. Story on this is we had a breakdown of the more significant trend line, a little brief recovery, and a lot of back tests since then. And what's also set up is a minor trend line underneath that right here. And so we had a breakdown today. And it looked pretty impulsive too and convincing. Now, what happened? Two things happened. One was we hit that 76.25.32 level, or we'll call it 76.25 on NQ, just below. And that's a pretty well-defined level. You can see all these reactions here on that line going to the left. So a lot of reactions there. And we grabbed support. So that's you know, tip number one, when you have a trend line that you're looking, whether it's a downtrend line or an uptrend line, and you're looking to position long or short on a breakout, and I've said this many times in the past, pay attention if you have any horizontal support, price support or resistance levels just above or below that trend line. That happened here. Now, even more significant than that, and anyways, where I guess I should have made clear, what happened is that resulted in a failed breakdown or whipsaw signal. He broke down, and boom, a big impulsive move right back up. So one reason, this is speculation, I mean, it does fit with the recent trading patterns, a sharp move up, but you probably had some people short that, thinking it was a breakdown of NQ, which it was, and then they got squeezed out today once it reversed and regained that trend line. But more importantly, and this I talk about all the time, is even though NQ, if I'm trading an index, usually NQ, small caps, I like a little more beta than the S&P, but I always keep a chart of the ESE minis and the SPY up at all times. And as a rule of thumb, those are my two main go-to large cap indices. And if you're wanting to short one or the other, I think it's imperative that you wait for both to break down. They usually have very comparable support levels normally, whether it's trendline support, maybe it's one has a trend line well defined, the other has horizontal price resistance. But I say this often, what happens, and it happened today, if you short NQ on that breakdown or if you shorted it at the same time, yes, this is a little bit longer term chart. This is 3 months, same hourly candles, but we're going back 3 months. That other chart was only 2 months. But you can see what happened. So NQ broke down, and after the breakdown, shortly after, when NQ hit that support level just below, ES fell down to its uptrend line, the same one I've been highlighting, and found support there. And that is why you want to wait to see both go, and that's why you had a little whipsaw false breakdown there in NQ. I do believe that trend line I pointed out a minute ago in NQ, the minor trend line, was very valid. I think a lot of eyes are watching it, a lot of reactions, and but the reason that that sell signal didn't pan out is because of this. SPY, or ES in this case, found support on this trend line once more, had a bounce. It's not a very impulsive bounce, but support is support until unless broken. So there's that. I also mentioned before, to be safe, you have this little area. We had several reactions right here, roughly that 2905 level, and you really want to see that go. ES it's had a history of a couple brief dips below here, so you want to see a very impulsive break of this level, 60-minute close, and now, of course, we need to see NQ break that same trend line as well that it broke today. It needs to break it again in conjunction with ES. So that's it for you futures traders, or even if you're trading SPY, QQQ. I think it makes sense to keep an eye on those charts as well as ES and NQ. And like I say, that the trend is up. So if you're going to take a counter trend trade, which means a short right now, you need to have a lot of the check marks for that trade. You need to have a clear evidence to go ahead and short. So there's ES and NQ. Let's just jump over to SPY. Here's SPY on the 60-minute time frame. There's that minor or trend line off the late June lows, the yellow trend line. Really nothing much has happened in the last few days, even heading into last week. The levels I was harping on were the 291.62 level, 289.39, and of course this uptrend line. So what happened yesterday, as I highlighted in the video, we popped up, made a back test of this trend line, which recently broke down. Here was an impulsive candle after flirting with it a little bit. And today, what happened today is we simply went in and made almost a near backfill of yesterday's gap. I put this line right here. That was yesterday's close, or the highs on the last candlestick of the day. And so you can see SPY. And again, this chart doesn't look exactly like ES. ES, I have it at holding trendline support. SPY, I have below. So they're not the same securities. SPY is trading futures, and futures are being priced where by supply and demand, where market participants, there's a time premium there and everything. So it's pretty much where investors guess the S&P 500 will be at that point in the future. And we're on the December futures contracts, by the way. They expire in December. That was the ES I was just showing you. So that's that. So here we are. Nothing major to report. I wanted to just point out those whipsaw signals, but here we are. We're still below trend after a back test. We're back above that 291.62 level, but we're flat today. So let's try not to read too much in today's market. The price action as of now. QQQ 60-minute chart. Similar story. There was that uptrend line, comparable uptrend line on QQQ 60-minute chart here. There's that breakdown that similar breakdown that we saw in NQ today, but boom, we snap back above there. And for the reasons I mentioned before, you can see that QQQ actually reversed a little shy of support here. I have a pretty decent support at 184.86, and that is one other reason why, even if I were to be trading QQQ, I would be keeping an eye on the charts of NQ, and therefore I'd want to see, let's just say hypothetically, if I was shorting right now QQQ, or this morning, I would have wanted to see QQQ break this 184.86, and I'd also want to see NQ break that level that it bounced off today. So you can see the Q's reversed just a little shy, and it's a pretty well-defined support level. Back above the trend. Now this red candle, we're cracking below it again. But the more significant thing, I think, is this trend line we just continue to back test. It's not really a big move up in percentage gains. And again, these are 60-minute charts. So we've only been doing, well, now it's actually been almost a month. Here we are. We're on October 2nd. So yeah, it's been about a month of back testing that trend line. And again, this trend line, we have to go all the way back to early April. It's a pretty significant trend line. You can see it here off the early April lows. There it is. Here's all the back tests. So same story, not much new to report on QQQ. We don't have the sell signals yet, or at least in the broad market, or at least confirmation with SPY and QQQ and ES and NQ breaking down. And there's one other thing I want to look at, and then we'll wrap this video up. Let's just take a quick look at Apple. Okay, let's take a look at this daily chart of Apple. This spans 2 years, and I've shared this chart many times before. You can see over the past 2 years, I've marked all the divergent highs. Many of these were pointed out in advance at the time, and you can see the corrections that followed. This was a divergent high over here, and the annotations to the left of the chart, 12% correction, 9%, 10, 17, 13. And now, for the very first time in quite a while, actually, for the first time since back here, we had a small divergent high, and that was followed by a correction of about 6% right there in Apple. And it took us back to this level here, this 181.71 level. This is the first time since then, and again, that was early June, that we have a divergent high now. Now you'll note here that I've listed that as an unconfirmed divergent high. What I mean by that, well, we just made a bullish cross on the PPO right now. We're in the process of making a bullish cross. For me, at least, and this is just how I trade, and again, I don't know if this is in any textbooks anywhere, but for me to have confirmed divergence, I want to see the PPO make a cross, come back up, or at some point and then make a bearish cross, which then effectively puts in a lower high. That's what divergence is all about. I prefer to see that. You don't always have to see the lines cross. You can have this as divergence, whether lines cross or not, but it's clean if you get that separation, or at least in my book, it's clean. If you get that separation, bullish cross, and we turn back down. So at this point, we technically have negative divergence, but the reason it's not, I call it unconfirmed, is because the PPO is a momentum indicator, as is the RSI. Both of these are pointing up right now. At least the slope is positive. They're not pointing straight up, but they have a positive slope. This is a negative slope. This is flat. So once that goes back down, then the trend is lower. But that's why you don't, and I always say this, divergence, even if we had it confirmed, is not a sell signal. It's merely an indication of a likely trend reversal. But again, I wanted to point out the momentum right now is still upwards, to the upside in Apple. So we don't have anything even remotely close to sell signal. But now for the first time again, and you can go back and look at all these divergent highs, these corrections averaged, low double digits, and we have that divergence. So now at this point on, anytime going forward, if we get a reversal, now there's another takeaway from this. So you go over here and you can see divergent highs, and you can see some corrections were larger than others. And in the past 2 years, the biggest correction that we had by far, the best buying op that you had for Apple was right here, a 17% correction. What made that one different from the rest? Well, I'll tell you. Here's a key uptrend line right here. It's pretty well defined, pretty long term. These corrections here, they broke minor trend lines, and they were smaller corrections. In some cases, like this one, they brought it back to the primary trend line. But when you get an aging trend line, a pretty long rally that's getting pretty long in the tooth, then you have divergence in close proximity like this. When that divergence plays out, it starts to play out for a correction, which might have normally be, these weren't very large divergences, might have been a 5-7% correction. However, you break a major trend line support, and then it brings in a rush of sell orders. You have longs that stop out under that trend line. Trend line support's been broken. You have shorts that pile in. Various reasons go into that, but it's a more significant technical event when you have a trend line break. And of course, we had another pushback up to back test that trend line from below right there, and then had another correction. So then again, we had two big corrections. That worked off a lot of the overbought conditions, the excessive bullishness. So the next time we had a divergent high, again, I showed you was about a little minor 6% drop, and that brought us back down to what is now this trend line. So here we are. We have a divergent high, the first divergent high, again, unconfirmed, but the first one in a while. And if and when it plays out, even if it continues to push up, which it very well may or may not, that's, anything's possible. But the point being that if it plays out, and I say this, these divergences play out at least 90% of the time for a correction or a trend reversal. Not always, but enough that it makes it pretty puts me on alert. If it plays out, it's going to take out this trend line, and that could trigger a deeper correction than this last one. Let's just say that. And now you might ask, well, Randy, okay, great. You can hit these 10% corrections, get in, get out, but the overall trend, there's been more money to be made on the upside. Absolutely. And, it's, you have to have a trading style, a reason to buy, trading plan when you go in. I don't buy something simply because it's going up, but I will buy if there's a reason to buy. And in fact, the best buying op that we had on Apple, in at least 2 years was a 17% drop. And back at the time, on April, there's a post. You can go on the site and search for this one. Go back to January 24th. Apple approaching trendline support. I made a case for that correction right as it was happening. This is the chart back then, and I stated calling for a move down to at least the 155.50ish area, calling for a drop of at least 14% from the highs. And here's that chart I posted back. They're always time and date stamped. January 24th. Showing there's that trend line I just showed you a minute ago. This was that divergent high back in January, and there was my forecasted path calling for a 14% drop, and we went just a little bit over that due to the downside momentum. We had about a 17% drop. So now my point being that also that correction at that time set up for a nice bounce. And the near-term outlook for Apple on February 12th, I stated the case, and it's all in this post, why I was bullish and going long Apple, covering the shorts. I was actually short NQ. Apple, you short NQ. If Apple's going to get the call on Apple right, you can short NQ or QQQ because Apple is by far the largest component of both that NQ, QQQ, and S&P 500. But then at this point, correction target was hit, and I listed a couple charts. There's one of them. Here's a scenario. Comes down to this is a hourly chart showing why we were going up, making the case. And again, that was based largely on what you see here. We had a divergent low on the hourly chart. We had other indicators, things, overbought conditions, everything else. So we don't get these often, but every now and then you get a case. So point being, there are times where these same things that work to call these, identify these pullbacks are the same reasons to go long. when you get the divergent lows, breaks a trend line support, everything else. So that's I just wanted to state that you need a reason, or at least I do, to pull the trigger on a trade. Otherwise, you're just randomly buying and selling and guessing something's going to continue to go up because it has been. And if your plan's to buy every pullback, every dip, where do you buy? Do you buy a 3% pullback? Do you buy a 5%? If you did that, you would have got crushed on Apple. Where do you stop out on this case? Because it drops, 16, 17%. And if you do that, it works well in a strong uptrend. But what happens when we get in a sideways trend? And there are plenty of sideways trends, or even worse, a bearish trend in the market. By the time you figure out your buying the dip strategy isn't working anymore, you've bought, stopped out, dozens of times. So again, I just want to make clear that everyone has their own trading style. Mine is I'm not a trend chaser or a trend follower. I tend to call tops and bottoms. I look for divergences. I look for trend line breaks. I look for bullish and bearish chart patterns, and I tend to get in near the highs on shorts, cover near the lows, or get in near the lows on longs, and then cover at price targets or resistance. To just loop it back to Apple, this is what we're watching right now because this is the world's largest stock, biggest component of QQQ, the S&P 500. And right now we have, again, for the first time in a long time, a divergent high, every one of which, as I'm showing you here, for the past 2 years plus, is played out for correction at or near, double digits. And I see no reason why this one won't be any different. In fact, last time I pointed out this divergent high here on the 60-minute chart, we went down, we hit my first target right here at 215-ish level. And you can see we bounced back and we're testing those highs right now where we were before. So this was a divergent high. It's actually about the third test right there. If Apple manages to just go up a little bit higher, it certainly can. It'll still have divergence here on the 60-minute. And more importantly, as I just showed you, it has divergence now on the daily time frame. So while this was a 60-minute chart with relatively shallow price targets that I had, the price targets then get larger. When you move out to a daily time frame, you're talking swing trades, whether they're long or short, that are lasting, will likely last weeks or months, versus the intraday charts like this 60-minute chart, which is good for quick trades lasting anywhere, usually just a few days to maybe a couple weeks. All right, so we'll wrap it up there. Those are the levels I'm watching: Apple, NQ, ES, SPY, and QQQ. So far, pretty much a go nowhere day. And if anything changes, I'll update you guys. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.